think when you look at all of these challenges that we face, one has to break them out one by one and analyse the impacts of them. You know, some of the challenges we've seen recently are the safety concerns, and we're dealing with that. The safety record of goldfields has improved substantially. And I know, and you know, and the country knows that it's a business imperative to operate safely. So if we can improve our safety further, you know, we'll have a sustainable business going forward.
We've seen the rand run up almost 25% against the dollar since the beginning of the year. We've had complaints from various sectors of the economy about its strength. Do you think there's room for the government to do more than it has done so far in trying to curb the strength of the currency? Well,
it's quite interesting when one looks at the rand. I'm not too sure that the government can do too much about the rand. You know, market forces are dictating where it is. The rand is probably going to be stronger for longer because of the weakness in the US dollar. And one scenario that a lot of people don't want to contemplate that could be a reality, though, is the rand could actually get stronger from where it is, particularly if the dollar gets weaker. Now, in terms of our business, we have used a rand gold price of 230,000 rand for our business to position it in the short term. And in fact, even with the rand today being at 770, which is slightly weaker than what it was, the rand price we're achieving today is 258,000 rand a kilogram. So it's not as bad as you think, because the gold price has actually buffeted a lot of the rand strength. So if the rand goes to 7, but the gold price goes to $1,200 or $1,300 an ounce, it's not going to be that bad for us. You know, for other exporters that don't have the benefit of the gold price going up there, I understand it may be more difficult.
And yet we do see an impact on your revenues, as we saw in this quarter, down 5%.
Absolutely. This quarter we did see the rand at 782, but the gold price was at $959 an ounce. Today the gold price is at 1,030 and the rand is at 780. So we could actually be a little bit better off next quarter than what we are now. So it's not all doom and gloom, and we're certainly not going to bet or position this business on a weaker rand.
Doesn't this call perhaps for a change in tack and perhaps going back to the use of hedging to try and protect yourselves against a further strengthening in the exchange rate of the rand against the dollar?
We don't believe in hedging the gold price, because our mandate, part of our charter to our shareholders, is that we won't hedge the gold price. And frankly, a lot of our shareholders, they are much better attuned to hedge the gold price than what we are, better equipped. So we're not going to be hedging the gold price, and in any event, I would see the upside on the gold price greater than the downside, you know, particularly with the potential for the US dollar to weaken as the United States increases its monetary base.
Let's talk about the other challenges, the issue of nationalization, which has cropped up many a time. I think for many people, uncomfortably quite two-way frequently. Do you get a sense that the South African government could well change tack and go back to nationalization?
I think it's a non-event. I think you're finding that certain fringe views are out there in terms of nationalization. I don't believe this is the view of the government. And certainly feedback I've had from the government, and certainly from our ministry, is that it's not on the cards. So I think it's a whole much of ado about nothing. So I don't see nationalisation entering the debate anytime soon.
But in any other part of the world, if you have a member of the ruling party making pronouncements like we've been hearing out of ANC Youth League, surely that would be cause concern. You don't think those things are?
I don't think so. I think the government is allowing the debate to continue. But I believe that they've made up their minds in terms of the strategy. And they recognise the importance of South Africa continuing to be part of the global economy, making sure that we have continued foreign direct investment. You know, so I'd be very surprised if that strategy changed in the short to medium term.
The government has also put its name, if I may use it that way, behind the proposed power increases by Eskom. 45% over 3 years. Various numbers come out. People speak about a tripling in power prices in 3 years. Can the gold industry survive that, do you think?
Well, it's going to have negative consequences on the gold industry and on the mining industry. And you might find that some of the more marginal supply of gold is going to disappear. You also might find that certain projects may not go ahead. And we don't even understand the full knock-on effect yet of that kind of increase in power. Remember that power is an input cost component into every other cost. So I would advise strongly the government to consider again. There is a public participation process to take place over the next 3 months or so, and we will be making our submissions to that as part of industry. So I think another solution needs to be found. We fully understand the funding issues that Eskom has, but nevertheless, we believe that this is too penal for industry at large to absorb over such a short period of time.
And what's your worst case scenario in that case?
Well, the worst case scenario is that you have the 45% increase a year, the rand stays where it is, the knock-on effect onto other costs is maybe, who knows, the same quantum again, and it could be pretty ugly.
I mean,
we're doing some of our own analysis right now to understand better what it means, and it's premature to talk definitively about the impact on goldfields, and that's the reason for our analysis now.
But I was going to say, if you were to factor, if say the worst case scenario was that indeed power prices were increased by 45%, what kind of impact would that have on goldfields, do you think?
It's too early to say until we've done some detailed modelling, understanding the full flow-through effect onto other costs in our business, onto our pay limits, etc. So I'm cautious to give you a definitive answer on that at that stage.